Thanks for having me. Thanks for coming. Hope it's not just for the free food. I will try to convince you of some valuable use of your time for the next 20 minutes or so. So I'm Mike Ewens, faculty here in the Finance Division at Columbia. This is some research with Arpit Gupta and Sabrina Howell. Both of them are at the Stern School of Business at NYU. So big picture, what we're going to do in this paper, which I'll try to summarize as clearly as I can, is explore the impact of a change in ownership of local daily papers, some of which used to be printed. I know many of you in the room probably have never touched one of those, but used to be a paper boy who delivered them, showing my age. Those daily printed newspapers in the United States, what happens when the owners of that paper change from, let's say, a family, a publicly owned company, a private company, to a private equity owned firm? Now, this is a huge topic of interest because private equity is now one of the larger owners types in the US and actually across the world. Millions of companies, businesses, plants, large corporations are owned by private equity. And so there are important policy and economic questions tied to whether this ownership form adds value and then specifically to whom. So there's lots of stakeholders. We've got you and I in the room who may have no stake in the firm or the politics of it, but we may consume those products. We may deal with the spillovers of that industry, for example, pollution, or in our case, political activity. There are other stakeholders like employees and shareholders. So we're going to explore that specific question in the context of this media industry daily newspapers. Now there's two ways to think about this. I'm going to unfairly call this first one the Elizabeth Warren view. And this is not a critique, it's just she's been fairly vocal about her distaste for private equity as an industry and its impact particularly on workers and consumers. And so for the question about daily newspapers, so 7 day a week printed daily papers, there's questions about whether private equity is an owner, and I'll define private equity in more detail soon. I'm going to assume everyone has a basic idea of what this is. Private equity as owners can harm the local media news environment by changing the way these papers operate and how they produce news. And so I've talked to a lot of media folks about this paper, and this is what they almost all start the conversation with, is, oh, private equity is coming in and doing some bad things and cutting back on the services that the media provides for the local citizens. So that's one negative side of things. And the other is the sort of traditional view of what private equity does as an asset class. Like why do many MBA students and people generally want to work in private equity? You can make a lot of money. Why are these folks paid a lot? Well, in principle, what they're doing is adding value to their investors. Those are going to be large institutions like Columbia's endowment, pension funds, and insurance companies, and they're adding value by changing the operations of their portfolio companies. So the typical idea is we go buy a newspaper or a group of newspapers. We, for example, may have some cost synergies, which is a nice way of saying we find ways to cut costs, right? We streamline operations, another fancy way of saying that. But what they also could do is change the way the firm produces things. So in the case of media, you could tell a story about adding mobile or finding new creative revenue initiatives. So you're going to have two polar opposite views on what private equity can do. And any of you who've done any research in any sphere will probably recognize this outcome is, of course, the truth is somewhere in the middle. It's a more nuanced view, which I'll tell you the media does not like to hear about. But for us, it's going to be a nuanced view of sort of both sides of this. So what we do in this paper is ask a fairly straightforward question about what are the impacts of private equity ownership on newspaper operations and in turn on the community as a whole. So you can think of part of what we're interested in is just saying, look, newspapers do provide a service. This is actually a testable hypothesis. They provide information. If private equity indeed does this to local news, well, this could have outside impacts on the community as a whole. So we're going to do this by collecting a lot of data. I'll go very briefly over this, but this was really a kind of multi-year process of finding this information and making it so that we could actually study it in a rigorous way. And I'm going to talk about this a little bit more, but it's not super technical, but we're going to construct data in a way so we can compare papers over time to other papers that are not affected. It's called a diff and diff strategy. So overall, like folks like me, applied researchers, we do not have the benefit of running a laboratory of newspapers and randomly allocating them private equity ownership, throwing darts and saying, you go VP, or I can't call up Henry Kravis and say, hey, every time you do a deal, could you call me first? Flip a coin, I'll flip a coin for you, and if it's heads, you do the deal. If not, they don't do that. So what we have to do is find the next best. And so for us, it's going to be a strategy where we compare papers before and after they're bought, That's gonna be our first, what's called the first difference. And then the second is we're gonna compare that to all other papers in the same year and area that were not bought. And I'll talk about it in more detail, but that's the basic strategy. What do we find? Nuanced results. First, after the paper is bought by private equity or its parent group, compared to papers that were not bought in the same year, same region. So that's the thought experiment you should have in mind. Digital circulation goes up. Remember, I'm focusing primarily on these print papers. At the same time, newspaper survival goes up. Technically, what you should have in mind is this is not a great industry. It's in distress. So what's happening is really private equity is coinciding with a slower failure rate, right? So it's not so much that these papers are killing it, right, in the industry. It's instead they're just dying a bit slower than their peers, which is still good news, right? Now, what cost? Employment falls. So this we see in lots of industries of private equity is that, in this case, the number of reporters and editors fall. Now, what I cannot say, I'll show you soon, is whether this is firing or this is quitting. The basic idea is there are fewer of these folks around. Any of you who know how the press and media works, well, these people write news stories, right? They do investigative journalism, they collect information, and lo and behold, after they leave, those papers experience a change in their production of news. They produce less news with words like school board or community or mayor in them compared to those papers that are not. And this is, I would say, what the media who's read this paper and called me or my co-authors, what they were really concerned about is that this outcome, and indeed this is potentially concerning. And indeed, if we think about these first four bullets as sort of what the baseline effects or impacts of private equity are, this last piece is saying, well, given the news environment changes after private equity, what does this mean for local political awareness, turnout, and activity? And it's not good news there. So in regions or districts where papers are taken over by private equity, we experience all, on average, the first four bullets, and in turn, we think this is tied to changes in the information available to voters. Right? So this is not PE's fault per se. It's not like they're literally changing political attitudes, but it's tied to a story that the actions they take at the papers have consequences outside of their portfolio. Yeah.
These are on a one-year basis?
This is technically a comparison of years before versus years after. So we're going to track the deal over time. And some of these take time to manifest. Right? It'd be a little weird if it was immediate, to be honest. So it's not immediate. Okay, so overall it's a nuanced impact, which is a researcher I like, but as I said, telling these stories in the press with a 4-paragraph article is a little more challenging. So this is the sort of academic me has to highlight. There are other people that have thought about these topics. The big picture here is that there is a pretty clear consensus in the academic literature about what happens when private equity buys firms. So manufacturing firms, accounting firms, healthcare companies. Overall, employment falls and productivity goes up. So again, think about stakeholders here, why this is a policy debate. Well, policymakers, politicians, of course, care about the number of employees and people who are employed, so that's a bad thing, but maybe the shareholders or the economy overall benefits when productivity goes up. I'm not going to make a statement on which one should be weighed more or less, but that's just the heart of the debate. Now, if you ask PE folks what they do, folks have done this, they say, I as an investor anticipating adding value to portfolio companies with a greater focus on increasing growth and reducing costs. So this should be our baseline expectation, regardless of the industry. You go get a blue suit PE person, put them in an industry, a firm, that's what you should expect to happen. So there's nothing new there. And indeed, if you look at lots of industries, restaurants, oil and gas, consumer on-the-shelf goods, basic patterns like that emerge. What's missing in this literature is not a lot of folks have studied distressed industries. Newspapers in our period of study and today are not doing well. And so the question is, how does this PE model fit in that kind of environment? On top of that, we're studying an environment where public goods are produced, right? Information that spreads to citizenry and helps inform them about politics. Okay, so I promised a little bit of an overview of what the heck PE is. This is not doing justice. We teach a course next term and the following year on private equity. I encourage you to take a look at that. But overall, what I have in mind is we have this entity called a private equity fund. One of the first important features is it's investing somebody else's money. And its objective is to maximize returns, subject to some risk appetite, for those investors. They not only have to do that, they have to do it in a limited amount of time. They have typically 10 to 15 years to do this, so they're on a clock. So we got a clock, got to generate returns, and not only that, I can basically make investments for 3 to 5 years Why? Because it takes time to do all this stuff I talked about, right? Years perhaps. So I need time to realize these benefits. So what those actions are: fixing capital structure, think levering up Twitter as a version of that. Was a version of a leveraged buyout, really. So it wasn't private equity per se, but it looks a lot like it. Changing incentive composition, stuff like that. So then I have these 3 dots. That's the sort of black box of PE, which researchers like me have spent a lot of time trying to understand how that all works. But in the end, profit motive emerges again. So again, the framework for understanding this is to think about who the actors are. And the actor here is a profit-motivated investor investing somebody else's money on a relatively short clock, who has to sell that thing again to realize the returns. So we don't see this in our data yet, but these papers will eventually have to be sold to someone else for the P investors to make any money. So I'm going to have that hat on in terms of how I think this should work. Okay. So again, very quick overview. Data, this is the big piece of it. If you ever come to my office on the 7th floor, you'll see all of these non-digitized versions. This has got a census from editor and publisher of papers. I'm not going to go into all the details because I really could, because it's cool, but the big thing was this line right here. Papers are owned by groups. PE firms buy groups. Groups own papers. So it's really extremely rare for a PE firm like KKR to come in and just buy the Omaha paper. They go buy the parent company, and then they own a dozen papers. And so this data allowed us to see a time series for about 20 years of these transactions. Now we had to bring, as you'll see here, lots of other data to bear. PitchBook gives us information about who actually bought these, are they private equity or not. We wanted to see the text. So there's a company that's digitized the print and allows us to do full text analysis, LinkedIn for employment, and political. Right? If you're interested in this, happy to talk after. I could spend literally all day on this data stuff, but I won't. So, all the work I put in that data, one figure. One figure here is a time series of the number of papers in the United States daily. So it starts at about 1,500 and it's down to about 1,300 by the end of the sample. There were almost 2,000 earlier in the sample period outside of our study. And private equity emerges. It's not the dominant force in the area, but it is increasing its role. In the sample, it's about 5% to almost quarter of all papers are private equity. And they're buying lots of other types. Public companies taken private, family firms selling to private equity, or private companies. It's a mix. But overall, there's this emerging ownership type that we think behaves quite differently. The way I just told you about how private equity works is unique to every other one of these. That's the key thing. So private equity itself is, I think, interesting, but as a researcher, what's cool about it is it's a pretty clean experiment, right? This thing, I can kind of form pretty clean predictions about what should happen because I know their incentives and constraints. If I wanted to study, for example, the impact of a family ownership, that's really tough because I don't know what the family cares about, right? Are they profit motive or are they altruistic? Okay, and here's another view on what's happening. It's emerging and a growing part of it. So, what am I going to do? I've just got all these papers. They're bought by PE, about a quarter of them by the end of the sample. I can see them over time, and I can see stuff they do. Circulation, the news production, employment. I'm missing some other things we'll go through. Survival. And I want to see what is the impact of PE on those outcomes. And of course, I need to say, well, compared to what? That's the heart of most empirical work. Well, first I'm just going to compare these papers before and after. That's easy, right? Just say like circulation is one number on average, before and after compare. Of course, a huge problem with this is during this time period I didn't show you, circulation is going like this, right? So if there's a negative difference, right, you could just say this is just PE is dealing with the trends of the industry. Say, okay, you're right. So what I'm going to do is look at all the other papers in the exact same period of time that are not purchased by PE and try to basically account for that trend using them. That's our second difference. That's what diff and diff, if you've ever heard of it before, is what it does. So it just compares what would have happened to the absence using these non-PE papers. That's basically it. So I'm going to show you a bunch of tables. Too many numbers, I pared it down, but there's still going to be some numbers. And the key idea is we're going to look at the sign of a simple cell in the table and ask, if it's positive, it means that private equity had a positive impact or is associated with a positive change in the thing we're studying. Okay? And if it's negative, it's of course the other way. And if there's nothing going on, then it suggests that compared to their peers, there's no impact. So warning, there's going to be a bunch of tables, but promise something interesting will emerge. Okay, let's start with circulation. So this is the kind of table I'm going to show you. Let me just go through it quickly or slowly here, and then we'll go through the other tables a little bit. So I'm going to study circulation. So this is the number of papers delivered and paid for in print. That's the first two columns, or digital. So again, the thought experiment is we follow a paper over time, look at their circulation, PE steps in, we know what happens to the circulation compared to all the other papers. And so a number like this tells us that compared to those other papers, PE deals experience a larger increase in digital circulation than the peers that were not purchased by PE in the same period of time. So you can flip that around, print, that's this number here, falls. So what emerges here is it looks like PE is associated with a change in how they're selling goods, from the physical to the digital. And given what's happening over these 20 years, it seems like a reasonable strategy. What am I going to? 30? I have like 40, okay, go to 40. Now that I've given you sort of the framework of how these tables work, I'll just work through which of these tables mean. The next question is whether they close or not. So one worry is that these private equity guys come in, they sell all the assets, like in LA, they bought, it wasn't a PE firm, but LA Times was bought, they took the building, which was nicely placed in the middle of downtown, and they moved it to near the airport, which is not great. And that was an asset that could be taken private and sold. So that's one strategy you could imagine, and they maybe close the whole paper down and sell the assets. That's not what we're seeing in the data. And instead, we're seeing that closure of anything falls, the probability of closure falls. So it looks like survival goes up for private equity. Could be tied to this, right? They're shifting revenue strategies and helping these papers survive a tumultuous industry changing. Okay, that's good news. Not so good news from the stakeholders of employees as employment falls. This figure just shows a year-on-year version of this thing. This number here is just a before and after, but I can of course split that into a bunch of time periods and plot those numbers. So the takeaway here, the red dashed line is the deal date itself. When does the purchase happen? And so when these blue dots are below 0, it just means in this case, employment compared to peers in the same year falls. So it looks like reporters, editors, and all other employees leave these firms. They can be fired, they can quit. It's hard to tell, but compared to before, they fall. This is what, a lot of folks who viewed this as a negative, this is what they expected, and so we are indeed confirming that. It's about 8%. It's not huge, but it's certainly not 0. And you can see this manifests in loss of reporters and editors who are, if we believe the news provides important information and collection of information at the very local level, these are the folks that do it. That's potentially bad news. Finally, what happens to the operations? We have more papers surviving, but they have fewer employees writing what looks like typical news stories, and indeed that's what we find. The share of articles produced by papers by PE-owned firms falls. Share that are local, so think they say school board, mayor, county council. The share of those articles falls. That's the different. Basically, think about the difference between these numbers and this. It's below 0. Again, it looks like it takes about a year or two, but there's a meaningful decline in the likelihood that an article is written. And indeed, what happens on the other side is they shift to national. It's a little bit noisier. Those are error bars, so it's hard to disentangle this from 0. But think of the story as it's expensive to collect local news. You need a boot on the ground. National news, you just call up some guy in Washington, he writes a report, a few paragraphs, you print it in 5 different papers. It's scalable. Local news is less scalable. So that's what we find in the data. Okay, so let me just summarize all the effects. Yeah.
Just when you mention China, Russia, APY, that's what you're looking for when you analyze the
national news. So think of words that are, there's clearly a local impact of China, but the idea is the article.
Those are the words that you're looking for.
Yes, and those go up after. Okay, so let me just summarize all these impacts. I'm careful not to say effect, because I can't really randomize things. Digital circulation goes up, print circulation falls. Good, bad news. Survival goes up. There's a shift in resources, and we think this is tied to better firm outcomes. That's the story you could tell. It's hard to really pin that down, but here's what's going on. There's cost cutting through employment. And then finally, those employees did something, in this case, produce local news content, and indeed that's what we find, there's less of it. So our last part of the paper is just to say, if you believe that local newspapers matter for local news production and informing the local citizenry about how they should vote or who's running for what policies matter, the local news, the content produced by local news changes should have real impacts on political activity. That's basically what we're saying. And what we found in this paper is interesting variation or shocks to local news production because of PE. So we're just going to say what happens when PE buys a paper in terms of local turnout, voting behavior, and elections. And the channel you should have in mind is the local news environment changes, right? Because PE changed it. And so we can connect PE to local political content. Okay, so it'll be quick. So all we're going to do here is look at elections. So this is state legislative elections. At the district level, I can basically count how many papers are in a district for state assembly and state senate. And we can number how many votes, how many candidates run, whether it's a close election. The big takeaway of this table is it just looks like elections are becoming less contested. They're basically, there's more likely to be sort of incumbency favor. So a story about local news helping, investigate a corrupt politician, for example, this story bears out in the local election state legislatures. And so in case this close elections are less likely. You also can see that people are more likely to be like, who's my rep again? Basically, that's the idea. They ask a survey every year. Do you have an opinion of who your House of Representative person is, right? Jerry Nadler, wherever you are in New York. And the likelihood they say who or I don't care goes up after PE. Again, the idea being they're producing news. There's less of it. Bad for opinions. And then finally, we can get a very local election. Here it is. Very local election. Data's hard to find. County council and mayor. It's about as local as you can get when it comes to voting. And you should look at these tables and see a bunch of negative signs. It's not good news. So things like voting and turnout falls after a county experiences ownership change from non-PE to PE. And we think the reason is the change in the news production of those papers. Again, it's not that PE is literally coming in and stopping people from voting. I'm not saying that. It's a little more complex than that. And I would say if you talk to any PE investor, this was not their intent when they did it. Right? It's just an unintended consequence of the behaviors they have at the local paper. So that's it. Overall, it's a nuanced set of results. It's positive and negative, hence the nuance. Things look good at the operational side. These papers are surviving. They have these new creative revenue strategies we saw earlier. But there are some impacts. Stakeholders like employees suffer. I can't tell you whether these firms were bloated or not. That's a challenge. Maybe there were too many reporters. I don't know. Maybe there was too much local news. Again, I don't know. But those folks did lose their jobs, and that's clearly negative for them. And on top of that, this news production change results in a change in political, or correlates and coincides with changes in the voter activity of the local citizenry. So that's it. Any questions? I'm happy to take them. Thanks for your time. Yes, and then.
Have you seen whether those PE deals were located in specific areas in the US, or is it all across the US?
It's all across. It's a good question. So they tend to buy bigger newspaper groups. So they lean a little urban. So if you're a $100 million PE fund, you're not going to spend $5 million buying one paper in Omaha. So they do tend to go big. So there is an urban tilt, but that can't explain the results. You can kind of test for the robustness of the regional stuff. They don't seem to have a geographic preference other than sort of this accident. Yeah.
You said that PE firms said that this was an unintended consequence, but
that's me saying it, yeah.
But it's an expected consequence as well, right? You would.
I didn't expect it.
Okay.
Only because you have to believe that. No offense to the local media, it's not saying they don't provide services, but the idea that the impacts on news production would be large enough to change the information available to local citizenry and in turn have an impact on activity is surprising to me. But I think you have to step back. What media folks don't like to say, particularly daily papers, is that most of them are monopolists in the cities during our time. There's only one, outside of New York and some other big cities, there's one paper in any city. So they are a monopoly on that information, that daily news production. And so that sets up a prior that, if you mess with that one monopoly provider, it could really change the information.
And then I guess the implication here is that local news is less profitable than national news, or unprofitable generally.
Yeah, well, okay, the old model, it could be profitable. So like Axios is a company that's trying to do local stuff. I can't tell you that there isn't someone smart who could figure out how to make it profitable. It looks like this model doesn't, according to PE folks, doesn't work as a profitable model. Another way to put it is local news production is significantly more expensive than national, and the consumers are not paying a premium for it that would justify the cost. That again, it's not a judgment, that's just a statement. Yeah.
Joe, I'm just curious, when we're comparing the PE-owned funds newspapers to the non-PE-owned newspapers, does this group of non-PE-owned newspapers mean that those newspapers were never owned by PE funds, or were they potentially including some that were owned, sold, and now back independent that we're comparing against currently PE owned newspapers?
It's a great question. It would be a concern if I had a bigger sample of PE deals. It's just by almost pure luck, there aren't many, I don't think there's actually any in our sample period, of firms transitioning out and becoming a control. If you think of, we have a bunch of control papers that never got bought, it's very rare. It's a real problem, right? And what it would do for us is actually make it really hard to find the results, because it'd be comparing it to essentially professionalized firms, and it's not a concern for us. Maybe in 5 years, when these start exiting, it would be hard to run these regressions.
So in the engagement part where we have decreasing local engagement, do we have any way to track the age of the people who are being disengaged, which feeds into a hypothesis of who reads local news?
Well, okay, I can tell you, being the former paperboy, even when I was back, and I'm not going to age myself, but when I was a paperboy when I was 12, the typical buyer then was over 50. And also we know folks over 50 tend to vote more. So I think that's tied to the effects. The people who are consuming this are more likely to be active voters. So to direct answer, no. So one thing I learned from this project, collecting a lot of the data on these outcomes, is I am not concerned about our election system being hacked. It is so hard to find data cleaned up in this way. What does that tell you? These computers are not connected. There are political scientists for 40 years have been trying to put this data together. It's impossible. In fact, this one, just to kind of side point, this data is publicly available, but if you look closely at how it was created, it's something like 35 different political scientists put their data together. It was some crazy decade-long effort to do it. I just don't think we need to worry about our election system being hacked from a very macro level. That's a random lesson. Yeah.
Two questions. The first one is like, when maybe for us the benefit of the PE is the survival rate, and I assume you're comparing here like the places where there is a PE firm, like a PE bought firm and not a PE bought firm. What happens to the places that there was a local paper and there's nothing anymore? I'm guessing probably like the dispersion, the bias towards the incumbents would be even higher at this point.
Yeah, exactly. So if a paper goes away completely, for some of these results, you'll have 0 PE papers and 0 papers. This is going to make it harder for us to find results. So we're basically, a lot of the studies are comparing PE survivors to non-PE survivors. So if you believe, like if we've got a PE person in the room and they're like, look, survival went up. So if we weren't around, there'd actually be even fewer papers and even less news. So our results may actually be a lower bound on the impacts, because the alternative is even less extensive margin news. But most of these regressions are conditioning on survival, because we just can't run a regression with zeros.
And the second question would be like, if I remember correctly, 2 slides prior to that?
Yeah.
The impact on local news is like they're less aware of their close representatives, but
Yes.
the impact on the national ones were also like negative. So
It was 0, I think. It was technically 0. I believe it was 0.
okay.
So there's no change,
Wouldn't
statistical
expect it
change.
to be higher since they're covering more national.
Yeah, I think part of it is, look, people, my hypothesis, not what the data says, but is that you don't go to your local paper to learn about the president. There's lots of ways for you to learn about your senator and president, and so the change in the local news production is not going to affect that. If that was negative, the key idea is this number is a lot bigger than that number.
Yeah.
If it was also positive, it would be hard to tell that story. Yeah. And then, is this the last one? Okay, last one.
Okay, this is fascinating. Thank you so much for doing this. Really interesting work. So I'm just curious, I know you said that the data didn't incorporate like the PE exit in terms of what the firms intend to do with these newspapers, but I'm curious if you have any speculation regarding what that action might be. Like, do you see them selling them to each other, or, I mean, what do you think will end up happening next?
Yeah, so ideally what I would have had is exits and returns for the PE firms. And I could say, like, for example, they made money on this, say, okay, some of this is bad, some of it's good, but for investors, they're adding value, right? We don't have a lot of that. First, there haven't been a lot of exits. It's taking them time, probably because it's a distressed industry. And 2, they don't have to always tell us the valuations when they exit, us being researchers. Just looking at the last couple of years, I don't think this is a winning strategy. I think they overestimated their ability to kind of offset the trends. This industry is really suffering. And so you look at recent purchases of daily papers, the prices are ridiculously low. It's like they're just basically buying real estate. And so they would have to sell in those environments and the prices don't look good. I don't think it's going to be a way that a lot of these PE funds are going to make 5x on their fund. But that's speculation, I don't know the date. Okay, that was the last question. Thanks again, guys.
Great, thank you so much.